What is up, my friends? Welcome back to the Jameson Brandon channel, where we talk about all things money. Today, we're going to dive into crypto. We're going to dive into and cover really the only 4 charts that you need to worry about and look at on a regular basis to understand at a 40,000 foot view what is going on with crypto. So this means no, you don't have to be glued to your monitor for 15, 16 hours a day if that doesn't fit your trade plan, your schedule, or your ability to be able to, spend time trading, right? So stay tuned. Let's dive in. So things were good. All right, let's get this playing. We were talking about all-time highs. Elon Musk was talking about Dogecoin. We're talking about Lambo's first Dogecoin billionaire. Oh my God, life is good. Did it just hit $64,000? No. Where's it going? Why isn't it going up? Oh, it just keeps going down. Oh my God, $28,000. I just lost 50% of my upside. Oh my gosh, I bought the top. Can you believe it? These are thoughts that I'm sure a lot of retail had in May when we had our top at 64, 65,000, depending on what exchange, and eventually and subsequently went down and touched 28,900, and now obviously we're back where we are now, 45,000s, but it doesn't really matter. If you were anywhere in this part of the trend here, this last part right here, you're in pretty rough shape. You're maybe barely break even right now, and chances are high you are underwater. Now this brings me back, right? We gotta go back in time a little bit together. I've been in crypto since 2017, not that long, but long enough to know that first of all, when I came into crypto, I was very dumb and ignorant, just like everyone else that comes into crypto. So all the retail that's brand new watching this, still trying to figure out what the just happened in May, welcome to the party, guys. It's good to have you. In 2017, I came into crypto, fresh, brand new, didn't know what was going on, got involved in a lot of interesting things. Some of them turned out to be scams and rug pulls, and some of it turned out to be good. But in the span of getting in July 31st of 2017, I was able to accumulate over 300,000. I don't really know what that'd be worth now. It doesn't really matter. It was about 300,030 at the time, I think. And then by 2018 February or March of 2018, I had effectively lost over $200,000 of those gains. So gave most of it right back. And 2018, I spent in IEOs, is what they were called. Before IEOs is called ICOs, initial coin offerings, and before it was initial exchange offerings, and now who cares what it's called. But that was like the very first run of that. Got to see Binance basically launch and the Binance coin rise to dominance. So went through that phase. I went through I need to learn everything about every type of TA there is, from Elliott Wave Theory, Bollinger Bands, all the indicators. Went through the paid groups, saw the paid group leaders, the rise and fall of many of them, okay, who I'm sure you'd be familiar with some of the names if you've been around for a while. What else? Yeah, magical indicators, paid groups. Now here we are today, right? People getting rich off NFTs, people getting rich off of shit coins, from Elon to Musk coin to Dogecoin, right? It leaves you wondering, what should you really be focusing on? And I think that's a big question for a lot of people. Even if you've been here since 2017, I hate to tell you guys, I'm not gonna, obviously throw people's laundry out into the street, but I know a lot of people who were in before me who are still struggling with these cycles. They still struggle to sell. They don't take profit. They hold on to things too long, and they end up losing money. Now, in the long run, magically, they're still making money, but that isn't going to last forever. And so this is something I want to talk about more and more and cover. And if you want to follow along with crypto-specific content, then head on over to bullrunforever.substack.com and subscribe for free. It is 100% free. We've put out 28 issues for free, and I hope you'll agree with me. If you've read one, for the most part, pretty juiced up with details. My goal is to, be better for free than people's paid stuff. And there's so many shit newsletters out there. It drives me nuts. So anyways, let's talk about these 4 charts. And these 4 charts, I think that if you only have a few days a week, or if you're just burnt out right now and you're like thinking about quitting, which trust me, 2018, 2019, especially 2019, I was ready to quit and walk away forever from crypto, but I just couldn't, okay? So please, if I ask anything, don't quit. Instead, give yourself time to heal, give yourself time to get over whatever amount of losses you've just sustained, and come up with a new plan. Now, I went nuts, right? I went into macro, and I'm thinking, I need to understand, because when the 2017 rug pull happened, it was because there's a CME listing and a CBOE listing for Bitcoin futures. And we were all thinking, yay, institutions are coming. This thing's going to the moon, right? I'm calling for 40,000. We're all doing that. Needless to say, that didn't happen. obviously. The bottom was 3,000. So my point is that it's rough. First off, when these cycles happen and these things happen, like we're not out of the woods yet. And that's part of my point is first and foremost, we're not out of the woods, okay, with where we're at in the cycle, where the price point's at. Don't go thinking that we're free and clear yet, okay? Next is when these things happen and we don't know how to process them, everyone treats it and handles it differently. My solution to this was to go off the deep end. So yeah, I was learning macroeconomy and learning legacy markets and going off the deep end there. Then, like I said, I went through different phases and different areas of, I guess you could call economic expertise and finance expertise to try and figure out my own path, my own way. Yeah? Okay, enough of that. Let's dive into it. I've learned a lot though over the last 4 years. I will say that. And I wouldn't change a single moment, a single instance. The losses, the wins, all of it, okay, has all been beautifully worth it in the end. I hope that serves as some sort of encouragement. 6 minutes into the video, let's get into the goods. Okay, let's start at the top. First chart you should look at, the first chart you open up is total. Yes, you go into literally TradingView. You can have a free account. Don't even buy one. Doesn't matter. You type in total. It's the total market cap calculated by TradingView. This is everything. This is Bitcoin, ETH, shitcoins, altcoins, everything. And here is my little schematic of what's just occurred. Channels, patterns, the longer they are in play, the bigger the move that comes after, right? Whether this is a move down or a move up that occurs afterwards, just believe me when I say that a channel or a pattern or wedge, a bull flag, whatever, when it finally does break, it's usually big if it's been happening over a big amount of time. I'm sure you'd agree this is pretty big here, right? I mean, this started in 2020. So anyways, total market cap. This gives us an idea of how much money is in crypto. Okay, so coincidentally, this lined up with the May dump, okay? Whereas some of the charts that I'll show you were inverse of the May dump. This one lined up perfectly because yes, okay, the dump happened, money was lost, but money was also taken out in a rapid fashion on May 19th when the official dump actually happened. It's like the roller coaster, right? You hear it like ticking the chains, like tick, 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 as we're going up towards the top and everyone's starting to get excited, right? Momentum's building, like, oh my God, we're going to the top. And then finally, your stomach falls and the drop happens and everything goes to shit. But anyways, so I've got some stuff marked down on this. You can pay attention to it. You can think I'm crazy. I don't really care. But what happened was, we dumped and then we created this triple bottom at the bottom, happening in a double W fashion and then bounced out of it. You can measure fibs off of this. I teach this stuff. You can do all kinds of stuff to look at where we are in relation to where we might be going. But I can assure you that total is the first thing that you should be looking at. Funny enough, to show you fibs for just a second, if we measure off the top to the bottom, roughly, we just wicked or touched into the golden area, okay? The 618 and 65 area, which I call the golden pocket, the golden zone, okay? Which lined up magically with our volume. So we got a little wick into that, kind of touching into that low volume node there, and then down. We're either resetting because we bounced off to 50, which mean reversion and 50% retrace and Dow's theory, okay, which it's not actually a fib line, and we're going to continue up. Range, go down, right? That's pretty much it. We could do anything. We could go up, we could go down. But we have officially touched, the important point is that we touched the 2 trillion mark, and that was the first point of interest. So now we just watch what it does, okay? And we watch it unfold. And especially if you don't have a lot of time to pay attention to this stuff, you're in a perfect position because it's like, okay, just let a few more days roll on, see what happens. So this is telling you what's happening at the macro level of the entire crypto market. Next, total 2. Total 2 is everything minus Bitcoin. So this is altcoins essentially. This is shitcoins. This is Doge. This is Aave. This is Sushi, Uni. Notice how total and total 2 basically look the same. We got this big ass W, double bottom, after we had the initial dump, and that was the impulse back out. Okay, research triple bottoms, the importance of a W or double happening right on the end of a initial dump. It's all good, right? It's good things. We break out of the downsloping trend line and there we go. We're off to the races. And you'll see here, same thing's carved out, magically touches into the golden pocket, and then it bounces off to 50, and now it's just stagnant. It's just chilling there, right above the 50. So oversold, let oscillators reset and see what it does over the next couple days. We see positive momentum or bullish momentum waning a little bit. It looks like oscillators need to reset. So it wouldn't be a bad thing to see this range, or maybe even come down and touch the 382 and then come back up and try another run for it. But we want to ultimately see that close and flip support resistance here at this level, or break hook and go at this level, and then go up to this ultimately the 786 and 886 zone, which is near the top. That is total 2. Total 2 is going to let you know where money is flowing into. So understand that total and total 2 don't have to look the same. Total could be up, total 2 could be down, because alts could all be down, or vice versa, right? All the money could be flowing into alts. So these two alone you could just pay attention to and get a huge amount of data as to what's happening with the crypto market. The first thing I see most people doing is they pull out a Bitcoin chart. Why would you do that? Let's look at the whole market first. And this is how we do it, okay? This is how we do it here. And then from here, like with right now, with what we just looked at, they're basically telling us the same thing. This gives me no edge. I have no edge right now, okay? So let's try and hunt for some edge. So now let's introduce the next chart that we'd want to look at, which would be, that'd be Bitcoin dominance, because now, okay, we've got to look at the market cap. We see what the overall market cap's doing, then subtract Bitcoin. Okay, now let's see what Bitcoin is doing all by itself in terms of its dominance on the market. Again, this is where people would just roll out the Bitcoin chart and they would start there and see, oh, well, what's Bitcoin doing? Well, that's going to tell us what the rest of the market's doing. No, we just had a 2-week mini alt season, a DeFi rally, whatever you want to call it. And so if you were just paying attention to a Bitcoin chart and weren't looking at the rest, you completely missed this. You completely missed out on some really good gains over the last couple of weeks. This will tell you, and this is where the inverse starts to occur. Here, March, we started to test this level. This is a historic level here. Very important, going back to 2019, 2018, etc. Important level, going back long time. Purple lines, important levels going back a long time. Not going to explain them on this video. You can dig into it yourself. That'd be us digging into basically technicals, and I don't really feel like doing that. So I do that in the emails, and I explain in much deeper context, even what I'm showing you right now. So you can go there, subscribe for free if that's what you're into. March, tail end of March, into the beginning of April is when we start to break down, and then, oh my gosh, we'll break below this box, and that's when the Bitcoin dominance started to dump, and it bottomed at our May bottom. So it was an exact inverse of what we saw happening in the total market. So it's a dominance bottomed at the same time that the market bottomed. Now we are ranging in this zone here, in this level, and we're at the midpoint of it. Okay, so now we pay attention. That wasn't actually the inverse. I'm thinking of what I just said a couple minutes ago. It's not really the inverse, but you get what I'm saying. It was the precursor. That was a better way to say it. It was the precursor to what was essentially happening with the overall market, and that would have been a lead indicator of telling you, okay, well, if Bitcoin dominance is pulling back, well, then let's look at the overall market. Okay, so that could have given you a leg up. That could have given you edge. Again, just looking at the other two, you would have missed this piece. And so now let's add in the last piece, and really where our edge starts to stack, which the whole point of trading, if you're gonna trade at all, understand counterparty risk, understand the risks that you have just by putting money on the exchange, okay? Please make sure you understand all that first. But if you are gonna trade, even if you're investing, you need what's called edge. So you need to be buying when everyone else is crying and there's blood in the streets, like what Warren Buffett says. You need to be selling when everyone's talking about getting Lambos and Dogecoin is being brought up on Saturday Night Live, okay? That was the top. That was the indication that it was the top. And even people like me, I was still calling like, man, I think the top can get even more ridiculous. Well, we might have another shot at it. We might not be done with it yet. Okay, we'll have to see. Anyways, I left this on because I drew this the other day and it ended up breaking down, whereas I thought it was gonna break up. So key example of like, okay, I have a bias and I have a theory. Sometimes it works out, sometimes it doesn't. If it doesn't, that's why we use things like stop loss. That's why we have a plan. That's why we layer into positions, layer out of positions. We layer in how much exposure we have on a certain exchange in a certain time, certain markets, right? All of that matters. And all of that is your counterparty risk. So ETH BTC, when this is going up and breaking out, that means ETH is usually breaking out. And so when it's breaking down, that usually coincides with Bitcoin dominance going up. So these things work in tandem together. Sometimes they work in opposites. Some of them do specifically work in opposites, like Bitcoin dominance, usually with ETH BTC. Those work in opposites. These things can work in terms of the macro as well. Sometimes we're paired up with crypto in S&P. Sometimes we're moving in tandem, and sometimes we're moving opposites. Same thing with the dollar. You notice this with gold. When the dollar goes up, what happens to gold and silver and metals? They go down. Okay, same thing with treasuries. We're kind of finding that edge here, right? To where we can start to get a baseline and we can start to make some assumptions about if this thing's up, that means that thing's down, so on and so forth, right? The only other thing you could add in outside of this is if you wanted to look at the dollar, because that does affect these markets similar at times to what we see with metals. But anyway, my point is that, when this hit its triple bottom, look at that pattern once again, 3 touches and go. And then that was, okay, let's start to pay attention. And then obviously when it broke out of this downsloping trend line, 3 drives down, then we really want to start paying attention to it. And that's when it got spicy and broke out, and ETH broke out as well as DeFi broke out. This right here is our last 2 weeks, essentially. The last 2 weeks where Aave, Sushi, I think Uni was in there, CRV, and many others made a lot of people a lot of money in trades, okay? And now instead of breaking out, which that was my bias, we broke down. So now it's time to pay attention. Positions have been closed, and now we let this thing cool off and see what it does. Let oscillators cool off and come back to it, and just keep an eye on the higher time frames. You see, all these charts I've looked at was either a daily or 3-day. That is how you're gonna get a bird's eye view or perspective. And if you don't have a lot of time to trade, if you don't have a lot of time to really be looking at this stuff, this is the easier way to do it. Make it the least stressful that you possibly can on yourself. Believe me, it's worth it. And if you're not really a trader and you're more of like a holder and you're just looking to enter into long-term holdings and positions, and that's kind of your play, then this is especially valuable for you. But even down to, Davey Day Trader, this is valuable for you because I'm sure you're not really looking at this. A lot of times what I find is that people are sucked into, a 15-minute chart, a 1-minute chart, and they're freaking out over what turns out to be, $10, $20, $50 move. In the broad scheme of things, they're missing the whole entire big picture that's occurring. So start at the big picture, zoomed out, and then zoom in. You start to see what's happening in the broader strokes of the market, and then you zoom in and you can get specific and start to pinpoint stuff. So now imagine you started with this before you did anything else, and then you pulled out the Bitcoin chart, and then you pulled out the ETH chart. Now you've got all this insight into what's going on, because we treat them just the same, right? It's just an asset, and we're mapping these technically. We're using technical analysis on these and looking for what's going to happen. So when things break out, we're expecting more money to come into a market based on like these charts. When it breaks down, we're expecting money to leave the markets in total too. And as we see fluctuations between ETH BTC and BTC dominance, we're expecting ETH to run or Bitcoin to run. So do you see how now we have a good idea of what's going on in the macro market? Now we can dive into a Bitcoin chart, Bitcoin to USD, and an ETH to USD chart, and we can see what we find there, right? So anyways, these are the 4 charts that I think will serve you extremely well. If you do this already, or if you found this valuable, I'd love to hear your feedback below in the comments. If you're brand new to the channel, well, this is what we talk about. We talk about crypto, money, finance, all the fun stuff in life, right? So subscribe, stick around, hit the bell notification, and be on the lookout. More videos coming soon. See ya.